Alright, Eurozone just hit a new high in terms of inflation. Let's talk about it. Now, I'm not going to be focusing too much on the headline inflation, which is of course the CPI year over year. In terms of the year over year CPI this month, this came in at 9.2%, down from 10.1%. You can see, in the past year or so, we're slowly coming down. Obviously, in the max time frame, we quite recently hit highs on the Eurozone inflation. So if this has not just hit new highs, then what am I talking about? And before we do move on to that, you have to obviously bear in mind when you're looking at headline inflation, this is year over year. So if you have a monumental move and then the next year you don't have much inflation, that doesn't mean inflation has gone away. Of course, if we look at CPI headline inflation on an annualized index, you can still see at this moment in time on the CPI index, not year over year. This is definitely more important for economists to look at. You can see that we are still pretty much sitting at all-time highs in terms of inflation. So what's changed? Well, the Eurozone core CPI just pushed up to 5.2%. This was forecast at 5%, and previously this was at 5% as well. So we had hotter than anticipated core CPI inflation, and once again, on the yearly, you can see pushing up to new highs. On the max time frame, this is the highest inflation has been ever recorded on the core CPI index. Now, the main one that I really want to talk about today is the harmonized CPI index. Now, if you haven't heard of the Eurozone Harmonized Index of Consumer Prices, also known as the HICP, I don't blame you, this is a very niche subject. What the HICP does is enable international comparisons of inflation rates to be made between member states within the European Union. And how do they do this? Well, they harmonize definitions. So for example, if you're in one country, you would set your consumer price index basket to be the same as my consumer price index basket. This is why we have harmonized definitions. So it's very useful to look at for Eurozone specifically. Now, as you can see, this was previously sitting at 6.6%. Consensus was telling us that we should drop a slight bit and come down to 6.5%. But what did we do? We had the highest increase up to 6.9%, as you can see once again on the max time frame. This has only been in fruition since about 2019, but this is the highest recorded levels on the harmonized CPI, obviously excluding energy and food year over year. So not looking good for Europe right now. And also, if we do just wrap up the video, not particularly about inflation, not about inflation at all really, but if we look at Eurozone retail sales year over year, this was actually forecast to be more negative than it was. However, this was previously clocking in at 2.6%, minus 2.6% should I say, and now it's coming in at 2.8%. So what does this all mean? Inflation is still running very rampant in Europe. This is not good for the euro economy, and of course, with Europeans suffering from high inflation right now, obviously retail sales are going down. They don't have enough money to buy back into things. They don't have enough money to buy as much food as they previously would have done. They don't have enough money to buy the same, steaks, dinner restaurants, blah blah blah. They don't have enough money to invest in the stock market. More specifically, when retail sales go down, this is a key sign that capitulation are due to happen, or capitulations are already happening. So I do not believe, as inflation is coming down, I believe, mainly the ECB is going to be looking at the headline inflation year over year. However, I do not believe that a slight drop down to 9.2% is going to deter the ECB from raising their interest rates further and strengthening the Eurozone bonds, whether that's the Italian bonds, German bonds, Great British bonds, Spanish bonds. I do believe that all of Eurozone specifically is going to continue raising their interest rates, strengthening their bonds, and of course I believe the same thing is going to happen to the US. So just a quick update, not looking good. And also a little bit later we do have ECB Lane speaking about monetary policy. So this is going to be interesting. It's going to be an interesting day for the markets. And also, if we do just quickly come over to the S&P, see if anything has happened since this data's come out, because most of the time the markets don't particularly care about Eurozone as much as they do care about the US. It doesn't particularly seem like they care too much about this in the immediate short term. I'm not saying this is going to be like a super important headline event which is going to sway the markets, but nonetheless, if we keep on seeing information like this, that inflation has not topped out in the greater economy, it's going to cause further pain and capitulations down the road, even if it doesn't happen today or this week. So all I've got for you for this video. If you enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends, and if you want more content from me while I'm away from the charts, be sure to head over to my Twitter at 618_cowboy. All I've got for you today, as always, it's been your boy Cowboy Trades. I'm out. Peace.